Hello everyone, and welcome to our special presentation this week on very important lessons from our JCPC winners and losers. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I'm delighted to bring you the presentation this week. Well, the Derby competition has come to an end, and we've already given you some preliminary examination of the top competitors that won the competition, but the truth is we collected and started to analyze over 167 different experiments or trading systems at this time. And there is some vital information here to share with everyone. So stick around, it's going to be worth your while. One lesson learned, and Todd eloquently put this out there a couple of weeks ago, was that you'd never know what the market's going to give you during the length of a competition. Certainly one that's only going to span the term of 1 month in length. And boy, didn't the composite just have a volatile time of it throughout the competition. So we're really pleased all in all with the results that we saw because this was a very turbulent market to try to navigate. And so this is going to play an important role in future competitions, getting familiar with the time frame that the competition is going to span and trying to start the selection process of what your variables are in your trading systems based upon that. For example, timing models that pick out the bigger trends in the market, such as the confirmed call, would probably fare better in longer term competitions, whereas your faster timing models, stands to reason, would fare better in shorter competitions and more volatile, turbulent times, such as what we had in this past Jockey Club competition. So what we want to do is just pass along observations like these that we've learned so far from examining the 167 trading systems. Here's some of the common threads. Faster timers worked better for the shorter competition. Setting the right stop criteria was crucial. It was absolutely critical. And understanding the turn action in the genius, understanding the genius better, was vitally important and I think played a significant role in the outcome of who won and lost the competition. Let's dive in a little deeper and take a look at some of the common threads from the winning portfolios compared to the ones that did not fare as well and actually were the losing side of the equation. The common threads on the winners, the main common threads that I wanted to pick out and share, was again, the winners picked fast timing models for the shorter competition length. They used wider stops to reduce commissions and let their winners run. Drawdowns were minimal because of that. And what we also saw was ratcheting stops worked really well if they weren't set too tight, such as profit locker. Also, trailing stops. And with the profit locker ratios of the top contestants, they were very smart in that they set about a 4 or 5 to 1 ratio, and it seemed to work extraordinarily well. So what I mean by that is they would set the target gain 4 to 5 times the initial stop loss percentage that they wanted to use. We also found that 4 to 5% looks to be a good floor for the initial stop loss to work from. In other words, if you're going to use a 5% stop loss, 25% target gain might be a good place to start for a competition such as the one we just had. When we look at the common threads of the losers, one of the big mistakes was choosing the wrong timer given the current conditions, or not using the timer even in the manner that it was meant to be used, such as buying in a confirmed down or a neutral type of a situation. The other thing that we saw, of course, is just the opposite of the winners. Stands to reason, but setting stop losses too tight played a critical role. Closing positions on situation changes in the genius also played perhaps the largest role. But really those two were the dead bang nails in the coffin. If you set your stops too tight, or if you tried to close positions too frequently, it really hurt the competitors. So the net results here was the market timing was not precise enough for a shorter term competition. The commissions went sky high because the stops were too tight and they were changing very frequently even throughout the day on situation changes, and so the drawdowns turned out to be exceptionally large. So one of the things I want to share is we have a spreadsheet. I'm going to actually just bring the spreadsheet up. And what we're doing is we're tracking so far the top 5 competitors that we can get good clean data on, and also the bottom 5 competitors. And there's some interesting things to observe here. And so I'm just going to run you through the top 5 competitors first, then we'll flip down and look at the bottom 5 competitors and see some of the differences here. So here's the top 5 contestants as of the end of the Derby competition. A little bit later on, I'm going to share with you the fact that one of these competitors is actually still beginning to pull ahead at this stage. And I think that's something that everyone should know about. But if we look at just the top 5 as they're listed here, we'll start with JCPC contestant number 195. One of the common things that you'll see throughout the top 5 competitors, the signal that was used the most here was the DTI, which again is our intraday timing model. You can actually get several signals throughout the middle of any day, and that'll play a critical role in some of the settings that we're going to discuss here in a bit. Another observation that I've made here is that really a lot of different analysis modes from the Derby were used. We had everything from TD for today's Derby, to sliding window, to day trading mode, to buy and hold analysis. But the common thread that I can pick out here so far is that the look back periods for the analysis modes were actually quite short, indicating that they're keying in on the most recent market days and the most recent activity and parlaying that into good trades once they enter. So you can see the look backs here ranged from anything from 3 to 7 days with the top competitors. As we move over into stop loss, here's what I mean in terms of they widened out the stops a little bit, and they got a lot of that knowledge through the bootcamp training sessions that we had prior to the competition. One of the things that we did is we continued to monitor the model that I've put together, which is still hanging in there from a lot of the data that I showed from the early tests. However, one of the comments that I made was it was trading very frequently, and it gains an inch here and an inch there, and I just felt like we were turning positions over too quickly, certainly on the upside. So they widened out the targets a bit. You can see here GL is for gain loss, PL is for profit locker, okay? And you'll notice that the targets well exceed the initial floor, the initial stop loss percentage of say 5 or 4%. So that's the floor I was talking about earlier in the PowerPoints. Seems to be a good percentage area to shoot for in terms of setting the floor. And then it also appears that, certainly you can see with the top 2 competitors, the common thread there was the 25% really target that they were shooting for. One of the things I'll mention here is I didn't see as many tests with the profit locker in there as we did with the gain loss. So I really feel like if people use the profit locker a little bit more and construct them in the same way that we see here, you know, there's a chance that the profit locker could really start to we'll see a lot of it at the top of the next competitions. So I wanted to pass that insight along because the profit locker tries to lock profit in. It's different from a gain loss. In the gain loss, you have to get all the way to that target to close it out. With the profit locker, if you even get a third or a half of the way there, you know, it's smart enough that it's going to ratchet up and start to lock some of those gains in. So I feel like the profit locker really could be starting to impress here a little bit. Okay, in the next column, one of the things that you'll see, and you know, there's not really a huge difference between the winners and losers in terms of number of stocks held. That was a little surprising to me, but we did see the vast majority of competitors lean towards 5 positions, which stands to reason for a shorter term competition in that you're trying to really accentuate your gains. And so, you know, the more positions you carry in a trading system, the more steady they are, but it does tend to deteriorate the performance a bit in terms of total gains. So there's always that give and take. So we just don't have enough, I think, by way of people or contestants that tried 10 to really get some sound information there, we may find out that 10 really isn't too many, right? And I wanted to try to key on that, but that was something that we just don't have enough data around to where I feel like I should pass that information along. But one of the things I've seen over my tenure, of course, is what we said earlier, and that is typically the smaller basket size tends to lend itself towards higher profit potential, but with that comes typically higher drawdown, typically. This one turned out to be one that I think was a big reason why the top competitors, along with the stops, this is probably right up there in terms of importance, and that is in the Genius there's a setting for what are you going to do with the positions in your trading system if you go from an up to a down. So this is saying in the up situation, what are you going to do with any positions of which you may have opened in a down? Are you going to close them? Are you going to close anything opened in that other situation, or are you not going to close them? So the common thread among the top four is they did not close. Now, using the DTI, that was a critical decision in my view from one of the things I said earlier, and that is the DTI can sometimes give you several signal changes even throughout a single day. And so if you're not careful and you do something like close any position that we see down here at the bottom quite frequently, that's going to lead you to potentially turning over. If you're carrying a basket size of 5 and you have 3 signal changes throughout the middle of a day, you're going to be closing 5 stocks at a time each instance, whether they hit their stops or not. And so that's a critical setting, and I plan to show the Genius a little bit and show you where that setting is in that regard. It's incredibly important. So let me just do that now. I'm going to go over to VectorVest here, and let's talk about this setting for a minute, because in terms of future competitions, we want you guys to hit the ball out of the park, okay? And I think understanding this one is going to play a vital role. So if I come up here to the top and just go to portfolios, what I'm going to do is just create a new one over here on the left, and it doesn't matter what we call it. When you're constructing your trading systems, you know, you're going to be using the Genius. So again, the Genius is tied directly to the portfolio. So you come up here to the top right and you click Edit, and then you begin to build your system by clicking on Build a Custom Trading System. When we do that, of course, you're going to pick a timer, and let's just say the DTI Combo 1, because that's one that's fared very well in this current competition. It's only available to Derby subscribers, and it was a Derby competition. But if I then come to Automation Rules Up, they had to fill from Derby, pick a mode. We found that almost didn't matter as long as you kept the data very recent for the most part. The stops, we already learned. We want to have good ratios in terms of the stop loss, and that the ratcheting stops worked very well. In the more settings, this is the setting I was talking about on the spreadsheet. It says when entering this situation. So I called that turn action on my spreadsheet, which, by the way, we plan to email the spreadsheet out to Derby Jockey Club members at some stage here once we get it cleaned up a little bit. But this is what I was referencing. This box right here, okay? And that is, there's 3 settings in here. It says close any open position. That's the default. So if you leave it set that way, anytime you go from an up to a down, or even from a neutral to an up, we're on the up. So if we go from a down to an up or a neutral to an up, it's going to close any positions that are in there, even if you only went up, neutral, back to up again. Okay, so hopefully I've explained it better this time. We did a lot of coaching around this because I knew this was going to be the one that tripped a lot of contestants up. So we spent many days covering it, but just realize it's what do you want to have happen to the positions that currently reside in the trading system when you get a fresh signal. All right, and that can be, again, from anything from going from just to a neutral back to an up, where you still have kind of a bullish day overall, right? So it's vitally important. Close any position that's open in a different situation makes a little bit more sense, because you might switch from an up to a down, for example, in which case you might want to close the longs out. But again, realize that's going to lead to a lot of trades and a lot of commission. And you're not really, sometimes you can do that within, in this case of the DTI, within hours. You can, or even minutes sometimes you could do that. So just bear that in mind. Now, with a lot of the other timing models, I'll tell you, closing any position wouldn't hurt you as bad on something as like the confirm call, where you only get those every few weeks to every few months. See what I mean? So the faster your timer, the more you should not rely on closing those positions out, I think is a big lesson learned. Now, again, it works the opposite way. In something like the confirm call, you probably want to close something out if you've held it for several months and the market's turning around, right? So you just have to know what it's doing. And so hopefully we've cleaned that up for you. But what many of the top competitors did with the fast timers is they, like the DTI or even the primary wave. Now, all the settings really kind of apply to the primary wave again, honestly. The DTI is the one where really closing any open position is going to kill you. But the faster the timer, the more you should consider not closing any open position. Okay? Because you can get those quick signal changes from one day to the next, or from 10 minutes to the next 10 minutes, depending on the DTI or the primary wave. All right. I wanted to spend some time here, and I feel like hopefully we've spent enough. We're going to continue to give you more coaching on this. So if you still have questions about it, really, I'm going to make this a strong point of emphasis over the boot camps that we plan to keep running through these subsequent competitions. So just have some comfort in knowing that. But I wanted to try to put that one to bed if we could. All right, I'm going to go back over into the PowerPoint here. Don't close was the common thread among the top competitors. And again, closing, even in a different situation, tended to be a problem on the DTI, at least over the volatile market that we had, for the month of the competition. But I think that's one that's going to really matter no matter what the market is doing. Okay, so that's why we wanted to pass that along. If you're going to use the DTI, potentially even the primary wave, consider strongly not closing on a situation change, okay, on a turn action change from a down to an up or a neutral to an up, etc. All right, in the down mode, what the top competitor did was use today's derby. But again, here you see quite a variance in terms of the analysis mode that was used. Today's derby is the top strategies from the market open today, for example. Sliding window looked at the last 4 trading days with a 2-day hold. And so there's a number of tests in there indicating that a particular strategy was the strongest over the last 4-day period. You'll see day trading mode. Now this one, here's why I say stops were important. This one used a day trading mode of 27 days. Now I'm not sure how the customer or competitor came up with 27 as the number here, but again, with the trail, things were constructed pretty well here in terms of he was right around that 4 to 5% floor. Okay, the target well exceeded the floor, and the trail was a little bit looser than, say, your standard 5% trailing stop loss. So 8% seemed to work pretty well. You'll notice, again, similar basket sizes. Most competitors, whether they were at the top of the competition or at the bottom, leaned towards fewer stocks. And I felt like that was probably a good decision on both sides. The turn action, this was vitally important. It's quite simply here says don't close anything that was open. Okay, so it's interesting in the final competitor here in the top 5, where if things did turn to down, he was not closing anything. He had sort of a bullish bias on the market, which was pretty smart, given that earnings have been performing well and so forth, and that's likely going to lead to higher prices in the stock market. So must be a pretty astute VectorVest subscriber, to tell you the truth. But over here with the turn action on the upside, he was closing any shorts that he was picking up along the way. So that ended up being a good decision. He was able to, after the initial pullback in the market, clean house, take good profits on the short positions that he entered, and then parlay that into good long positions, because he was using the primary wave, which absolutely pretty well nailed market direction both down and up in the competition. Okay, so we had really, I just want to give everybody that was in the competition, certainly anybody that made money, a pat on the back, because it was a tough market. And to see percentages like 21, 13, 11, 10 right here at the top is just phenomenal performance. Really good stuff. But here again is something that I want to hit home. As a result of a lot of things that we've talked about so far, commissions played a vital role. They really did. With the top competitors, you can see numbers in the $400 to $600 and maybe even $800 range here. You can see with the third place competitor. As we go to the bottom of the list, look at these commissions, guys. $9,000, $4,500, $3,800 in a month. And ultimately, that's really what led to these percentages that we see here of minus 47, minus 27. It wasn't the basket size. That was about the same as what we saw with the top competitors. It wasn't the timing signal. The timing signal you can see with the bottom was DTI, primary wave. There was one confirmed call in there, okay? But about the same. Look back periods, about the same, okay? The really vital thing was, at least in many of these cases, 4% trail, 2% stop loss, 1% stop loss, 4% trail, 4%. The stops were too tight. And on top of that, I think really the nail in the coffin for me, for a lot of the competitors that didn't fare as well, was really the turn action. We pointed that out already, but I'm going to re-point it out a second time, and that's why I went off into VectorVest and showed you where the setting is, because I think that was really the thing that we need to get done here at VectorVest. We need to get you guys trained on the genius and the settings, because it's foreign to everybody, and it's our job to make sure you understand how to use it. But clearly, not closing using a fast timing signal tends to give you a better result. It absolutely does. We've seen it in my testing. We've seen it in the competition testing. We've seen it every chance we get to take a look. So that was huge. Widening the stops also was a smart play. Okay. All right, so let's do this, guys. What I want to do now is just highlight some things for you. There's still some trading systems out there that are starting to mature and come along and still do really well. And did you know this? In VectorVest, you have this portfolio performance button over here in the bottom left, just below all the portfolios. So if I click that, I can then look at all of my personal portfolios that I'm tracking. And in this particular case, what this is a database of all of the competitors from the Jockey Club competition. So we're going to continue to monitor these, because there's a lot of useful data that we're going to be able to pull out of these. Some data that I haven't even talked about so far that I thought we might reserve for this part of the segment. Okay, and what I'm going to do is just keep scrolling down here a bit, because I need to get all of them loaded up. It only loads so many at a time. But eventually here you're going to see that we've got the whole 167 plus a few more. But all right, and if I come back up to the top here and just click on the top one, you can even see the names. So these are all Jockey Club Portfolio Competition competitors. Okay, 107 is pulled into the lead as of now. It's continuing to tick along. Still using the DTI Combo 1. Okay, 83% winners in this strategy so far. Now I realize it's still only been, a little over a month, 6 weeks or so at this time, but that's still very impressive. Now coming in at a 16% gain, so not quite as high as the ultimate winner of the competition. I think that was 21%. But this one's been more of a slow and steady mover with a lot of winning trades in it. Okay, the total commissions here still only $837. Annualized rate of return, if we're able to keep this kind of performance up, is in the neighborhood of 130% a year. Your compounded return, of course, even higher, given that we're not even near into a full calendar year at this point. Your maximum drawdown, potentially the most impressive thing that I see here, is only 3.4. Now it's early, I'll grant you that, and I think as we get 3 or 4 months in, we'll probably get some different numbers here. But man, I gotta tell you, this thing's just cleaning house right now. So if I double click on it, that's the cool thing about this. When I double click on it, it puts it right behind. It loads it right up into the portfolio's window for us. It goes right to it, right? So I've got 174 tests you saw there, and it goes right to that one, And so if you click on a different metrics on this sheet, like drawdown or something, and click on one, it'll take you right to it. Pretty cool. And what we can see here, again, 16.22%. You can see it's real time. Here's the stocks that are being traded right now. And looks like got a little mixed bag, right? Got 3 longs and 3 shorts. And if we think about where the market's been here just over the last few days anyway, the market's kind of gone a little bit sideways here, hasn't it? Little sideways activity. So starting to pick up some hedges, I think, in this portfolio. Looks like most all the stocks are making money in the portfolio. You can see the gains and loss per share, the overall gains, and expressed as a percentage as well. Okay, and here's the stops, losses that are being used, and so on and so forth. But the 83% winners is very, very nice. And 13 was an interesting number. You can see 12s in here as well. It was 13, I believe, on the longs. Let me just verify. Yep, and 12 on the shorts. Okay, so maybe some testing was done to come up with the difference there, because a lot of the competitors did test for a month prior to the competition, but it is interesting nonetheless. So here's one that just keeps on clicking. Very little volatility, kind of gone a little sideways here, but the market has as well. And so very, very interesting. And this is one of the top 3, has now moved into first position as time has gone along here. If I go back to that spreadsheet, let me try to load that one up. Oop. There we go. This is our portfolio performance window that I had earlier. New competitor surfacing. Now I think 230 was a competitor that was flickering in and out of the top 3 at certain points throughout the competition. But wow, I mean, let's take a look at some things we see here. Drawdown only 9.55, and let me just double click this one, pull it up, and let's come over here. And looks like a lot of these were picked up 12th through the 15th. We're seeing gains in a lot of these positions here, and it's really starting to click. Now this one's not quite the steady climber that we saw earlier, right? This is what I meant. 230, I think, came out of the box really strong and was in a lot of the top performers there for a few weeks, or a week or so, beginning to fall off a little bit. It's starting to surge again. And so we're going to keep our eye on this, guys, because I think we're going to have even more valuable information a few months from now. But I just wanted to give you some insights into what we're doing. We're always at work for you guys. And when I say guys, I mean, of course, guys and gals. And we're going to get some really great data. It's going to take me some time to really get in and go through each and every one of these with a fine-tooth comb. But we've already made some great discoveries. We're going to parlay that into some new testing that we'll do. And I think that information, if you're paying attention, will also parlay into better results for you now moving forward. That's the hope, right? So I think we're really onto something here, and I'm really excited about the next competition because I think it's only going to get better. So I just want to kind of round things out with a few quick items. One thing I'm going to say is this: if you click new, and I start a new one again up here, I'm going to make this test 2. Up in the top right, if I go to edit and edit the Genius, if I go to select an existing trading system, if we click that one, select an existing trading system, you now have the Jockey Club contest winners right here available so that you can do some paper trading with them, see what you think. Now, I will say this, everybody I think will see them. You'll only be able to use them if you're a Derby subscriber, because they're pulling from the Derby platform. Right? They're pulling from the Derby tab. So you have to have the Derby to see and use them. I'll also mention this quickly. They do show up in the backtester, but you cannot backtest them because they're using intraday data, of which we only got 5 days, and it's just something that cannot be done at the current time. Okay, but what you can do is like I'm doing here, and like we did in our testing leading up to the competition, you can click on one of these, say, how about 107, select it, save it, and turn the Genius on, and you can monitor it from now going forward. Because what it's going to do, it notices that we're in an up mode. You can see the green spinning arrow, and here come the stocks. And so now we're trading just the same way competitor 107 would be, and all you got to do is sit back and watch it fly. All right, let's get back into it. So that's right. The top 3 Jockey Club trading systems are now published, and they're actual trading templates within Portfolio Genius. Again, these templates cannot be backtested. Jockey Club Bootcamp sessions are planned to continue on indefinitely at this point. So we want you to be a part of that. If you're a Jockey Club member, you can attend these sessions live from 11:30 a.m. to roughly 12 or noon Eastern. We do tend to go a little bit longer than that, but it's time well spent. These bootcamp training sessions are also being recorded, and these are going to be valuable to all subscribers. So you're going to want to check out www.vectorvest.com/bootcamp. These recordings are free to everyone, and there will be insight in there for everyone. In fact, one of the things we're going to start doing here, now that we've dissected a lot of the competition trading systems from the past competition, we're going to start making some new ones again, and we're even going to feature buying from search, which is not part of the Derby, because in the next competition, how many people read the views? Dr. DeLito stated very clearly a couple weeks ago now that we are going to have a competition in October. I believe he mentioned October 2nd is the start date, and we are going to pit the Jockey Club members against the end of day subscriber, and I think both camps have an opportunity to win. So I'm gonna do a lot of testing in particular with the Midas Touch stocks. Okay, you can buy from search and buy Midas Touch stocks, for example, and there's other things that you can do just from the search tool, right? So it opens up a whole new window of opportunity. We're gonna spend time getting both camps ready to rock and roll. So whether you're using the Derby or using VectorVest Unisearch to buy your stocks, you're both going to be off and running, and hopefully in really, really good standing. All right, listen, guys, get to the boot camp. If not, get to the website, and just quickly, I'll show that to you here. Again, there's some great information for people using the Genius, and also some of the Derby components right here at the top with several videos there. You'll also see we've already started to archive again the boot camp training sessions, and more is going to come. So from this point forward, we're going to spend some more time on non-Derby members as well. So it's going to be good for one and all. And at this point, guys, I want to thank you for attending. It's been my pleasure to spend this time with you to give you some insights from the competition. And training is on the way. So we're going to be here for you and help lead you every step of the way and get prepared for the next competition. And really, guys, the ultimate goal is not so much the competitions. We want to get you to where you can use the Genius and you can link this kind of situation right to a brokerage. Still get in there and do some of your cherry picking and things on the side, but get some of your money automated, even if it's in things like long-term winners, which there's not that much management to do anyway, but it can take care of even that situation for you. So anyway, long story short, I think it's going to be a great experience for one and all, and I think there's really going to be a lot of super stuff coming down the pipe here in the near future. Thanks for tuning in, and we'll see you for the Q&A on Monday at 2 o'clock Eastern. Bye now.